a long time. He's a very smart economist, John Rubino. John, thanks for joining us.
Hey, Daniel, it's great to see you again. It's been a while.
John, can you give us an update on the website? It's probably been at least a year since the last time we've done an interview. Any changes with the website? Any specific focus you have on right now for dollarcollapse.com?
Dollarcollapse.com is pretty much what it has been for the past decade. It's just a continuously updated site that covers the evolving global financial crisis. Which means it's getting more interesting as things get crazier out there, because they really are getting crazy. Hopefully we'll have time to talk about some of the really egregious things that are being done financially by the central banks of the world and the governments of the world, and the consequences that are pretty much inevitable at this point.
Since you started forecasting for a potential dollar collapse, or perhaps the inevitable collapse, but you never really said it's imminent, you have seen the financial crisis evolve, but kind of a curveball in here is money also evolving, because the confidence and the faith in the fiat currency system has gone a lot further than I thought it could have gone. We're seeing all sorts of crazy deficits from the U.S., from China. Nobody cares. The market has no rejection of the certain level of insanity that we have right now. You look at the U.S. Treasury yields. I mean, things are, it's kind of shocking as far as it's gone on. So are we seeing an evolution of money for the bad or for the good?
Well, first of all, yeah, I didn't think it could go this long either. To get to the place where the numbers are what they are now seemed inconceivable a decade ago. And yet here we are. The world has not yet lost faith in fiat currencies, even though, the amount of credit in the world has literally doubled in the past decade from levels that were already literally double what they were 10 years before that. And so we're in completely uncharted territory right now. One of the interesting things that we've seen happen lately is the rise of cryptocurrencies. You can say if the price of copper goes up, or steel or real estate or whatever, that's not necessarily a direct vote of no confidence in the dollar and the euro and the yen. But with new currencies arising, like with Bitcoin and the other cryptos, that is people making the decision to swap their fiat currencies into non-fiat currencies. So it's a direct vote of no confidence in the world's government-run currencies. So that's an interesting transition that we're in now.
Sure.
And it could be a big deal going forward.
Yeah, I mean, have you personally used Bitcoin for any transactions, or cryptocurrencies for any transactions?
I have not. I had a chance to buy Bitcoin way back when a good friend was trying to talk me into it, and I decided not to because I didn't understand it, and wish I had. But I love the concept of private sector currency, that it is not run by any government and operates outside the traditional banking system. That is a libertarian fantasy that's happening right now. But I won't pretend to know how this plays out. There are a lot of moving parts to the cryptocurrency story, and where it goes from here depends on a lot of things that haven't yet happened. So I'm watching it with interest, but not participating in any meaningful way.
Do you think it's a competitor to gold or an ally of gold?
Probably both. It's a competitor in the sense that the people who are losing faith in fiat currencies, who traditionally buy gold, now have a chance to buy these other currencies. And a lot of people are. Cryptocurrencies have gone up dramatically relative to precious metals. On the other hand, to the extent that there are huge embedded profits in cryptocurrencies, that's good for gold, because if you bought Bitcoin at $50 and now it's 10,000, you're thinking, all right, I want to ride this more because I'm loving the upward arc of this asset that I bought, but I also want to protect some of those gains. And so you probably aren't going to just go right back into fiat currencies by selling Bitcoin, and just stick with dollars and euros and yen or whatever your host country currency is, because you don't trust that currency.
Sure.
And gold is the thing that you would logically buy to protect the gains that you make in cryptocurrencies. To the extent that cryptocurrencies just explode, if that market gets bigger and bigger, then some of the profits that are generated by that process ought to be siphoned off into precious metals. So it's sort of a way station between fiat currencies and precious metals. And I think gold is really the end point of our monetary evolution. We're going to go back to the physical money that governments can't create in unlimited quantities, and we're going to base tomorrow's monetary system on gold and to a lesser extent silver. Cryptocurrencies might end up being the transaction mechanism. In other words, we use the blockchain to trade ownership of gold and silver as a way of making those things liquid, which they're not now. And so I think that's, in the coming decade, will evolve in that direction probably. And I think that's good for cryptocurrencies and great for precious metals.
Sure. Okay. So, it's really difficult to predict what will be the currency that replaces the dollar. And you've said that before. We're in an unprecedented situation where the entire world is on this fiat-based experiment. So looking at 2018, U.S. stock market, president has married his success to the stock market, which seems like a suicidal move. And then you've also got the economy picking up in many parts because of the tax cuts. People have more money, so they're spending more. A lot of optimism throughout the economy. I'm sure you've seen the numbers. Many small business numbers or consumer numbers are at highs or multi-decade highs. So with that said, do you think this thing is all going to implode on President Trump before his term's over? Or have the rolling back of regulations and the tax cuts bought himself another 4 or 5 years of this?
You know what? You could have asked me this question anytime in the last decade, and I would have said it implodes sooner rather than later, just because the numbers are so outrageous. What we've done now, what the Trump administration has done now is, 7 or 8 years into an expansion, they've turbocharged fiscal stimulus. In other words, they cut taxes and they're ramping up defense spending and infrastructure spending and borrowing money to do it at a time when that's not normally what governments do. Usually, 8 years into an expansion, governments are basically in surplus almost, just because lots of people are at work and their corporate taxes are generating lots of revenue for governments, and capital gains taxes are flowing in, and so governments are flush. But what we're doing is we're going to run trillion-dollar deficits for as far as the eye can see, starting now. And the other governments of the world are kind of sort of doing the same thing. China's debt is exploding and Japan's debt is exploding. And the idea that this can go on indefinitely is absurd. We should have been reining back our borrowing, and instead we're ramping it up. Now that'll buy you a little bit of time under normal circumstances, because if it's the bottom of a recession, fiscal stimulus is good, or at least useful. But now I think it's playing with fire. It's an extremely dangerous thing to do, because the amount of debt that we're creating now is already pushing up interest rates. And we've taken on so much debt in the last 30 years that we're really vulnerable to rising interest rates, because everybody has to roll their debts over, or their debts are attached to an index in some way, so they go up directly with interest rates. So let interest rates go up in the next 6 months the way they've gone up in the last 6 months, and that alone will blow up the budgets of most governments and a lot of individuals and many corporations, because if your interest costs double and you are already highly leveraged to begin with, you're really vulnerable to that. And that's where the world is now. In The Money Bubble, a book I co-wrote with James Turk a few years back, we have a chapter called The Variable Rate World, about how everybody is vulnerable to higher interest rates now, because we've all basically attached ourselves to these very low rates. Governments have borrowed short term in order to get zero or negative rates. But when rates stop being zero and stop being negative and start going up into positive territory, they got to roll that debt over. And it's now several $1 trillion a year worldwide that have to be rolled over every year at higher and higher rates. So this is a time bomb that we build into the system.
So everybody, I'm talking to John Rubino of dollarcollapse.com. One of his recent articles is on pensions, and you've been following this more than anybody for a long time. I think a few of your articles have been picked up by Zero Hedge. tell us about what's going on with the pensions, because that is one of the bubbles out there that I've heard many people talk about. I've read many of your articles, and it's amazing with this recent small pullback. All of a sudden, it came right back into the news again. So, are we looking at a pension crisis unfolding over the next year to 2 years?
Yeah, that's one of the crises we're looking at. The backstory of pensions is that 20 or 30 years ago, the people running states and cities, along with the heads of the public sector unions, got together and decided that they can't have massive wage increases because that's public. That's embarrassing for all concerned. But they can have really generous pension plans that nobody understands and that don't really cost you anything in the short run. You only have to pay off on these pension plans when the baby boomers start to retire. So they set up these deals, got away with it for several decades, retired rich and happy, and now we're paying the price for their mismanagement. Baby boomers are retiring, and state and local pension plans don't have anything like the kind of money that they need to cover the healthcare and retirement costs of my generation. And so they're all dropping more and more deeply into underfunding, which is a prelude to bankruptcy. And that's with stock market going up. When the stock market turns back down, when we have the inevitable bear market, that's going to eviscerate these pension plans. So you're going to see Chicago, they're already functionally bankrupt, but you'll see them go de facto, de jure bankrupt. They'll have to do it in some legal way where they default on their pension obligations. Same thing with the entire state of Illinois. Same thing with many, many other states and cities. So that could be the catalyst that tips us over from being optimistic, and willing to borrow, to being terrified and desperate to save, which is the same thing as saying, a 1930s style depression. That's what the pension system blowing up could give us. And the numbers keep getting worse and worse. So it's fairly clear that we don't have a lot of time left to fix the pension plans of the world, and we can't fix them. There's no legal way to cut benefits on a scale that they've got to do to make the numbers work, or to raise taxes in a politically acceptable way to make the numbers work. You can't make these numbers work without blowing up some aspect of your constituency out there, if you're a politician. So they're going to just let it go off a cliff, apparently. And, that might be the thing that blows up the system. There are a lot of other things that could happen first, but pensions are clearly something waiting to come back to bite us, and probably in the not too distant future, a few years at least, or the next bear market. That could happen in the next 3 months, and then we'll have headlines about pension funds blowing up pretty much everywhere.
John, you're a very smart economist and journalist, and I want to ask you this because I know you're very open-minded when I've spoken to you in the past. So I'm going to throw this question at you. It's probably the perfect question, but I don't know if you get asked this a lot. What do you see? I mean, you see the whole thing. You're seeing the big picture, the bonds and the economy and everything that's happening with the commodities. What, if anything, has you optimistic that we can get through this time and we'll have a better economy or a better world in, say, 15 years? Do you see any technologies out there? Like a lot of libertarians think it's going to be the cryptocurrencies. Do you see anything out there that has you a little bit optimistic that, hey, you know what? If we can just hold this together for 5 more years, 10 more years, I think we can come out of the other side with a better world.
Well, finance and technology are two different questions. On the financial side, it's baked in the cake. We have a gigantic crisis. There's no way to make the numbers work. And so we have to somehow get rid of a lot of the debt that we've taken on. You can only do that in 2 ways, basically. You default on most of your debt and have a 1930s style depression, or you inflate it away and have a Weimar Germany kind of hyperinflation. We've got one of those 2 things coming, and it's not clear which. Now, on the optimistic side, there are amazing technologies out there that are changing the world in really positive ways. Solar power is going to completely replace coal in the not too distant future, and electric cars, whether they're run by fuel cells or by batteries, that's not clear yet, but they're going to replace internal combustion engines pretty soon with very positive effects on many aspects of the the global economy and the global financial system. But that doesn't stop the crisis that flows from all the debt that we've got coming. That's going to come, and the only question is timing with that. Whether it's this year or 5 years from now, a gigantic financial crisis is out there and absolutely necessary. You can't take on a lot of debt without having a crisis of commensurate size to get rid of that debt. It's like the way we mismanaged our forests in the U.S. for such a long time. We stamped out all fires, and the forests accumulated so much underbrush that now when there's a fire, it's hotter than it should be, and it's incredibly destructive. And there's no way to get past that except to let it all burn and then start over. Well, the economy is the same thing. We've got to let it burn. We've got to let the debt be wiped out one way or another, and then go back to sound money, and then start from a sustainable position going forward. However, at the bottom of the next crash, there are going to be some amazing tech growth stocks to pick up. And in fact, the book that I'm supposed to be working on now is tentatively titled After the Crash. And it's about all these technologies. When the time comes, there's going to be, regenerative medicine companies and alternative energy and new agriculture business models that are so much better than what's existing today that they'll become growth stocks. All of that's going to be out there, and they'll just be ripe for the picking because everybody's going to be terrified of the equity markets. But we still have to get to the point where everybody's terrified of equities. We have to have that crash. And so that should be the big thing that people are paying attention to now, is how to protect yourself from this tsunami of crises that are heading our way. And in that way, have the capital at the bottom to turn optimistic and start buying all these fascinating companies with huge growth prospects. And how do you do that? That's the intellectual challenge of our time, really. And one way to do it is to look at history and see that financial crises have come and gone throughout human history since there were markets originally. Go back 3,000 years, there have been financial crises up until today. Gold and silver have done well in virtually all of them, because that's where people hide when the money that governments create and then destroy ceases to function. We go back to gold and silver, the local currency price of those things go through the roof, and the people who hold precious metals end up having the capital to start over. So that's probably something that is easy and understandable for a person to do, and it's probably the best thing you can do financially. And right after that is pay off debts. Get out of debt as quickly as possible. And in that way, protect yourself from an interruption of cash flow. You should only borrow money if you're guaranteed to be able to pay it off. Most people aren't guaranteed to be able to pay off their debts right now. So they should be looking at paying them off in the short run, and in that way, protecting themselves from the impact of a leaky roof or a lost job or an illness or any of the number of things that can interrupt your income and can destroy the life of somebody who's too highly leveraged, who's too deeply in debt. Do those two things, and you're halfway to being completely protected from what comes.
That's very good advice. All right, I hope to have you on the show much sooner, hopefully in the next month or two, again, for an update.